Council Liaison. I thank everybody for joining us for creating and maintaining a vendor screening program. Gerard Smith will be our speaker today. Before we get to the presentation, I do want to wish everybody a happy World FM Day. Today is World FM Day. And as always, there will be a survey concluding the presentation, and I changed it up a little bit. This time, instead of the email being sent to you after the presentation, you'll get a little box that pops up to ask you if you want to take the survey once you exit the presentation. We do encourage you to take that survey. The Corporate Facility Council Board eagerly always awaits when I send out the results of that survey. Okay, and as always, yes, a PDF copy of the presentation will be emailed out later today, as well as a link to access the recording of the webinar. Today, again, our presenter is Gerard Smith. He is the president of Global Risk Management Solutions, the recognized leader in providing innovative vendor screening solutions that assists companies to reduce exposure to global business risk and liability. GRMS is the only company that can provide a customizable global vendor screening and management program in over 120 countries. Prior to GRMS, Gerard founded Cost Recovery Solutions, CRS, the nation's largest cost recovery profit improvement firm, which was established in 1992. Gerard is considered one of the leading authorities in the area of preferred vendor negotiations and has been a speaker at conferences and seminars throughout the world. He is a graduate of USC with a BS in Public Administration. He has been interviewed and quoted by such periodicals and news media as Fortune Magazine, The Wall Street Journal, The Washington Post, USA Today, Cable News Network, aka CNN, and the Associated Press. And also, before I do turn it over to Gerard, if you have any questions, please feel free to type them into the chat box, and I will feed them to our presenter as we go through the presentation, because you all have been muted for audio quality. Gerard, the floor is yours.
Great. Thank you, everybody, for participating in today's webinar. And I invite questions. So as I go through the presentation, please type in questions. We'd be glad to answer any questions that you have both before and then also after. So I'd like to introduce Joe Fabiani. Joe is the COO of GRMS. He is also a panelist, so he's going to participate where it's appropriate as far as providing some insight. So why don't we go ahead and go through the presentation. Joshua, right now I'm looking at nothing on my screen, so are you going to set that up for us?
Yeah, you should be seeing the first slide currently.
Okay, I'm not. Okay. All right, I'm going to have to go without seeing the slides, unfortunately. So let's start with what the problem is in terms of vendor screening. So the problem is that currently more than 80% of companies conduct background checks on their full-time employees, but less than 20% do any type of due diligence on their vendors, which creates problems for companies both in terms of financial and reputational risk. There's different federal laws that companies must comply with there's financial liability, and there's also reputational liability if your company ends up in the press not following the federal laws. So that's one of the issues. And the next one, I want to define what exactly is a vendor. What exactly is a vendor? So a vendor is defined as any non-personnel costs, which includes suppliers, service providers, and independent contractors, both on-site and off-site. What that means is basically any individual or company that your company pays except employees, you're held liable under some of the federal laws, which we'll talk about in a couple of minutes. So what exactly is vendor screening? A lot of companies are now implementing vendor screening programs, and it can cover a variety of different issues. The first issue that I want to talk about today is financial stability, which means what is the financial stability of that vendor that you're doing business with. And things that you want to look for is if they've had any kind of bankruptcy, obviously, or they have liens and judgments. Perhaps they have had a product liability lawsuit against them, or perhaps even just what's their balance sheet look like at this point in time. I'll give you a simple example. We were contacted by a company in San Diego as a general contractor, and they had just paid $600,000 to an electrical contractor to work on a project of theirs, and then within 48 hours of paying that $600,000, the electrical contractor filed bankruptcy, and the GC lost that money, and there was nothing they could do about it. So financial stability obviously is a big part of whether you want to do business with a company or not. Another issue is insurance certificate tracking. Now, in our experience, there's over a 90% failure rate on certificates of insurance, which is an enormous liability for corporate America. It can include a variety of issues, whether it be expired policies, inadequate limits, lack of endorsements, maybe incorrect additional insured language. There's a variety of different issues that come up when we talk about COI tracking, but with over a 90% failure rate, clearly there's an enormous liability because you're going to be stuck with the issue or the liability if that particular vendor has not provided the adequate insurance coverage. Joshua, we're still stuck on the problem slide, so we're not seeing the next one, what is vendor screening? So, okay, keep going. We've already passed what is a vendor. Okay, so now the third one I have listed here is global watch list compliance. And what that means is that there's a variety of federal laws as well as international governmental watch lists that you need to be aware of. One of those, which affects every company, is something called the Patriot Act. It's a U.S. law, and the Act states a company may not buy or sell to any company or individual listed on the OFAC list, domestically or internationally, knowingly or unknowingly. So it's written very broadly. A lot of companies have been fined for violations. So OFAC, basically the OFAC list is a list that the U.S. government has created that says do not do business with these individuals or companies. OFAC stands for Treasury Department's Office of Foreign Asset Control. So it's the Treasury Department's Office of Foreign Asset Control. And under the Patriot Act, it says you're not allowed to do business with anybody on that list, knowingly or unknowingly. In addition to that, there are over 550 international government watch lists that you should be concerned about, not just from a financial liability, but also reputational liability. And those can include the UK Bribery Act as well as a variety of different governmental watch lists around the globe, because the Patriot Act is specific to the U.S. government. And then the fourth bullet on this particular screen then shows document collection and management. And that means for vendor screening, you also want to focus in on W-9s, perhaps safety documents or certifications. You could include documents such as conflict minerals documentation, which is a big issue in today's environment, California Transparency Act declaration. If you don't comply with the laws, there are enormous penalties in there in the millions of dollars. So that's why these issues as far as the global watch list compliance is important, and also that you have to get certain declarations, such as if it applies to you as a manufacturer, for instance, conflict minerals, or if you're a retailer or manufacturer, the California Transparency Act is a state law that you have to comply with. So there's a variety of issues, again, that are both federal and state level that you want to address within the vendor screening program. Now, on the next slide, you'll see some of the benefits of the vendor screening program, and that would include consistent standard is what I wrote there. And what I meant by that is that a consistent standard is applied to all of your vendors versus, let's say, departments or divisions making decisions. A lot of companies want to create a national or even a global standard and ensure that all of their vendors are complying with that standard. It may be minimal financial requirements, insurance requirements, that they have a current W-9 signed and dated, those type of things. A vendor screening program allows you to establish a standard either nationally or globally and manage that standard and know every one of your vendors, or at least being compared to that standard, and whether they actually are in compliance or not. That gives you the choice whether you want to continue doing business with them. Then the next bullet says ongoing COI management. We've talked about the idea that there's over a 90% failure rate on certificates of insurance. Now, many vendors provide a correct COI when they sign the contract, but then either reduce the coverage limits or perhaps even worse, cancel the contract as soon as that they are awarded the contract, that's where the failure rate is so high. And I'll give you a simple example. Let's say you have a vendor that signs your contract, agrees to your terms and conditions, and then they provide you a COI that's in compliance. But then let's say 60 days later they don't pay the premium. So 30 days after that, now the insurance is canceled. Now your company has an enormous liability, and the question that we always ask is, how do you know that liability exists? 99% of companies say they'd never even know that happened. That's what a vendor screening program does for you. The vendor is notified as soon as the COI, either they've reduced their coverage amount or they didn't pay the premium or whatever the case may be, that they would be contacted and told they're no longer in compliance and that they have to address that issue because the liability rests with your company if you've not solved that issue on the front end. The next bullet talks about professional license collection and verification. What that means is, let's give an example. That might be the easiest thing. Let's say you have a plumber that comes on property and they're there to fix a pipe. Did anyone from purchasing or procurement determine if the plumber is even licensed to be a plumber in the state, let alone have insurance? That's the important part. You want to make sure that there's a license, that they're licensed, in this case, plumber, or whatever the case may be. So part of the vendor screening program can include a professional license collection and verification. And then another one, which is very important, is a confirmation of disadvantaged business certification, such as minority or woman-owned businesses. When you receive a certificate from an organization, a vendor, that says that they are either, and if they self-report it and they say, yes, we're a disadvantaged business, your company may take credit for it, but they may not be. So you must verify with the issuing agency that the certification is current. It could be that they have an old one. It could be that they themselves self-declare themselves a disadvantaged business. But at the end of the day, they've never gone through the process, so they're not official, which means your company cannot take credit for that. So again, that could be part of the vendor screening program also. And let's go on to the next chart then, as far as value. Why actually implement a vendor screening program? And again, I'll stop for a second to say if anybody has any questions, type them in and Joshua will get them to me, because I do want to make sure we address anything that anyone has questions about. So a value proposition, what do you actually get out of a vendor screening program? More and more companies, whether it be retailers or manufacturers, property management firms, or whomever, are now actually implementing vendor screening programs because it's becoming extraordinarily complex in terms of managing the vendors, especially around the globe. So the first thing we talk about is vendor due diligence. What we mean by that is what we talked about before, ensuring that the financials are correct, that we have a certificate of insurance and we manage it daily, that we've collected the W-9 and that it is the current one, that it's signed and dated, because the IRS requires your company to have a full set of the W-9s, so you want to make sure that it's current with the current address. So that's what vendor due diligence would be, those type of things. The second bullet we put here is risk mitigation, and there's a variety of different types of risk. What we're talking about is first, number one, compliance with different governmental watch lists, which includes the Patriot Act and the OFAC list, but also the 550-plus international government watch list, which is equally important. The second risk would be financial. And we keep coming back to that because you award a contract and then you find out that they're financially unstable or they're unable to actually produce the product or service that you've contracted with them. So the financial one would be the second one. And then the third one, not to be ignored, is the reputational risk. A lot of companies are ending up in the press because they've not followed the regulations, whether it be the conflict minerals. A number of companies have identified that they've got issues with that in the last week. Clearly, some other companies have been caught with issues with the Foreign Corrupt Practices Act, called FCPA, the Patriot Act. Large companies have been fined hundreds of millions of dollars for not being in compliant. And understand, it's all sorts of different organizations this applies to. I mean, under the Patriot Act, large companies like Bank of America or Chevron or Exxon have been penalized, but also Travelocity, PayPal, ESPN, even the New York Yankees have been fined for violations. So they either thought it didn't apply to them or they simply didn't manage to it. The next thing they knew, they've got a reputational problem because now they're in the press with an issue. The third bullet here is administrative cost savings. As you're probably understanding, every company needs to do vendor screening, whether internally or outsourced, but there really is no choice Under federal laws, you have to do vendor screening because it's a requirement at this point, and it makes good business sense too. The other issue, though, is that many companies have entire departments that, they're there only to manage perhaps certificates of insurance or W-9s. That becomes costly because the laws keep changing and you keep growing the department trying to manage these COIs or whatever the case may be. There are some vendor screening companies that provide vendor-funded models where the vendor pays to be screened based on your company's requirements. So there's no cost to your organization, but rather they have the vendor pay a small amount to pay to actually be screened based on your requirements. That's becoming more and more of a best practice, but the important issue is that you do the vendor screening program. So let's go on to the next screen then, additional value proposition or value that you will get out of it.
Before we move on to the next one,
Yes.
we have a question real quick. It said, what risk, if any, for internet companies where you never receive a W-9 or a COI?
Well, the COI is insurance coverage, and so those are things that your procurement organization would incorporate in the terms and conditions. In other words, you have to protect our company in case there's a bug or you infect our software or whatever the case may be. What you need is a physical certificate of insurance to verify that your company is listed as an additional insured. And so you need a physical document from your vendor sent to you. The problem is oftentimes they send it when the contract's signed, and then they change it 60 days later. Not always, but understand the 90% failure rate says there's a huge problem. So you need to manage that COI. To just put it in the contract and say you contractually agreed to it does not make any difference. If there's a huge lawsuit, then they end up filing bankruptcy and you're stuck with the liability. So you need to have a physical COI. When it comes to the W-9s, the IRS regulation requires that you have a current W-9, which is signed and dated when the current address. So at the beginning of every year, every company looks and makes sure that they have those, but they also want to make sure that they have the current information, because normally the address on that W-9 is where they're sending the tax document. So that your CFO would be interested in having a complete set. So you want to make sure that you get both a hard copy of the W-9, it's required, and a hard copy of the COI, the Certificate of Insurance. Okay, are there any other questions?
Nope, not at this time. Thank you.
Okay, that's a good question. So if anybody else has those type of questions, please ask, because I'll be glad to answer them for you. So let's continue about the value proposition. In other words, why would you want to create a vendor screening program? The next one involves a lot of procurement organizations, what we simply call purchasing leverage. A lot of companies would love to see a national or global database of all of their vendors to aggregate purchasing volume and reduce their costs. And it's been very difficult to do that. So for a lot of companies, it's the first time when they establish a vendor screening program, because they're having their vendors go online, provide some information that's current. They now can look at that and say, okay, what vendors are we using? Do we need to go out to bid, or can we aggregate volume? I know a lot of our clients, procurement organizations, are trying to reduce the number of vendors that they're doing business with, and procurement's using the database, whether it be a national or a global database, to say, are there companies that we're already doing business with that we can give them additional business, reduce our expenses, and become more profitable? So it's a byproduct. It's primarily about risk mitigation. But now that purchasing has this ability to create this database and then be able to use that database, that's a benefit. And then there's also benefits oftentimes when you have that database that, like we talked about, all the W-9s are in there, so now finance can get those out, whether it be printed or whatever else, or legal or risk or compliance can look into the database. You have all the information about all your vendors. That's what vendor screening is all about. The next one we put on this is continuous certificate of insurance management. We keep coming back to that because it really is important to have a daily COI management program. Because what happens is, at any point in time, you'll have a vendor that perhaps is getting in financial trouble, and so that they'll reduce their insurance coverages to save money. The problem is the liability shifts from their company to your company when they do that. Because if there's a liability, or if you're a retailer and there's a product liability lawsuit against that company, or they reduce their insurance to the point where you're now stuck with the liability, that creates a lot of problems. You know, and again, we talked about they can provide you a vendor can provide you a compliant COI today and then cancel the coverage tomorrow. And the question is, how would you know that happened? Because that's where the liability is. So that's a big issue, this continuous COI management. And then the last bullet on this chart is that all the vendors are held to the same standard. And this, again, coming back to the idea that you have an objective, not subjective standard. Objective being we have one standard, and does this vendor meet our standard, yes or no? So do we want to do business with them, yes or no? Subjective would mean that individual departments or locations or divisions would be making those decisions based on their particular requirements. But when you have a standardized vendor screening program, it means all vendors are managed to the same standard, and that's important again. So let's talk about what a best-in-class vendor screening program could look like on the next chart, which then shows you what some companies can provide, which is, again, enhancing vendor screening, creating best practices. And I just want to put this out there for whatever it's worth for you to think about what would you want your vendor screening program to look like, because every company does it slightly different. But the main thing is that you want to have a situation where you've created best-in-class, or at least addresses the issues that we've been talking about. So the first thing we listed here is what's called third-party verification of all information. We don't want self-reported information, and what that means is sometimes in some systems, a vendor will simply put in the information they want you to know. There's a financial reporting agency, but it's primarily self-reported information. And so what happens is, in essence, the vendor provides the information. It's primarily self-reported by the vendors and primarily focused on the entity, not the owner. And so what ends up happening is you end up in a situation with a liability because, number one, you're depending on them to be honest. It's like me asking you, what's your credit rating? And you say it's 800, and I have to believe you. But the idea would be you don't want self-reported information. The next one is what we put comprehensive graded reports, which the report, the subjectivity goes away, and you have one standard again. The comprehensive report can cover the risk issues, the financial issues, the compliance issues. But again, you want a written report for audit to be able to say we've done this, and they're either in compliance or not. So written reports are important, and that it be graded. That did they meet your standard, yes or no? The next one we put on here is national or global database of all your vendors. We talked about that. That's what's considered a best-in-class. Sometimes companies will try and create their own vendor screening programs internally, but they may not have some of these particular attributes. So it's your decision how important these things are to your individual company. Now, the next one we put on here is client business rule driven. And what that means is that you need to be able to establish unique screening packages for specific vendors. In other words, you may have a different screening package for domestic vendors versus international, whether it may be different between Asia and Europe, or whatever the case may be. It may be different in terms of the type of vendor. If you're a retailer, it may be direct versus indirect. If you're a general contractor, clearly there's different insurance requirements with someone putting an HVAC on the roof of a building versus a landscaper, because the liability is enormously different. So what you want to do is you want to establish unique vendor screening packages for individual vendor categories. So it may be specific categories that you have certain requirements, but you want the flexibility within your system to say we have different requirements for different types of vendors. And then the last issue on this chart is real-time information. Some of the reporting agencies, national reporting agencies, provide information that not only self-reported sometimes, but more problematic. It may be 6 to 12 months old in terms of what's been provided information-wise. You really want to make sure everything is real-time. Some of the subscription-based services are unreliable and frequently include the self-reported information that simply be distributed and resold to other companies. And the problem, because now you've got a decision you're making based on information that may be 6 months old, and now the company's in trouble, but 6 months ago they were not. So real time is very important, but also that idea, again, going through these individually, that establish unique packages, and that we want to make it so that it's not self-reported information. So are there any questions about any of those particular issues?
Give them just a moment. So there's none right now. Give them just a moment to type any questions that they may have.
Yeah, I want to make sure we address it.
If you have any questions, please type them into the chat box so I can read them to Gerard.
Okay, well, you're getting very good at this, so there's no questions. Joshua, is there any specific issues you want to make sure I address at this point, or does that give a good overview?
We do have one question just came in. It says, how would you suggest getting started with a basic program, hold on one second, program where none have been in place before?
Okay, actually that's a very good question. When we're talking about vendor screening program, oftentimes companies use a flat file out of their finance organization that goes back 12 to 18 months of any non-personnel expense. They usually start the program there and then continue to add vendors on an ongoing basis. What you want to do is you want to establish what the minimum requirements are, and then some companies start with either US only and then go to EMEA, Europe, and then Asia Pacific. Others start with the high spend vendors first and then go to low spend vendors. The objective is every vendor should go through a vendor screening program to ensure that you're in compliance with the Patriot Act, which again could produce enormous liabilities for your company if you're not in compliance. And there's other issues, obviously. So the way I would start a program, if you're doing it, and I guess the question is, how do we do it internally? The answer is you need to establish what the criteria that you want to include in the vendor screening program and then determine whether you can manage that internally. A lot of companies are having difficulty because of the global watch list and because of the complexity of the federal government's new laws that they're outsourcing it. But if you do it internally, first identify what the criteria is and determine whether you have the ability to manage to that. And then secondarily, determine if there's different criteria for different types of vendors, because that will also make a difference. I hope that answers the question. And just as a side issue, there's a 5-minute video on our website, and you see the URL, but we set up a 5-minute video to kind of give an idea of what vendor screening is on our home page. So if you have a moment, you might want to go to that URL on your screen, and there, like I said, there's a 5-minute video on there that kind of gives an idea of what is vendor screening, and that might help also.
Great. Another question is, do you have a sample of a graded report?
Yeah, if you give me a call at the phone number or email me, I'd be glad to help you out. Because every report's different,
yes,
every company has different requirements.
Great. Someone's asking if they'll receive a PDF of the PowerPoint. Yes. Later today, I'll be sending an email to all those that have registered for the event, and we'll be sending out a PDF copy of the PowerPoint.
Yeah, and I invite anybody that's on the call, if you have questions or simply want to kind of bounce ideas off me, I'm always available. You have my direct phone number and my email address right there. Feel free to contact me. I'll be glad to help you out in any way I can. We've partnered and worked with, the IFMA organization, and the idea would be is that anything we can do to help you out, we want to do that. So we have a lot of experience in this area, and if we can give you some ideas of what other organizations are doing, we'd be glad to share that information with you. We can't tell you who's doing it specifically, but we can give you a lot of good ideas.
Okay, great. So as you mentioned, IT vendors providing a COI. What should be considered in their COI? What type of insurance should they provide?
Okay, that is going to get into a very complex answer. So whoever asked that question, do me a favor and just email me, and I'll have Joe Fabiani contact you directly, and he'll be able to give you very specific information about that, because Joe's kind of an expert in this area.
Okay, great. How do you manage the monitoring of COIs for changes in policy? Internally run now and receive COIs for vendors annually? How do you self-monitor, and what's the frequency?
Well, the frequency is literally a daily management, but the way it normally works, and Joe, do you want to jump in here? I realize you're... Joe, are you on mute?
No, he's not muted.
Yeah, I can't hear him neither. Okay, I can't hear Joe at all. Joe, if you can hear me, maybe you want to step into my office, then maybe you can answer it over here. Sorry to do that, but I can't hear you. Joshua, I'm going to put Joe on the speaker right now, so that way he can speak. Okay, just hold on a second.
Okay, can you hear me now?
Yes.
Okay, perfect. Well, to answer the question, there's numerous ways that we manage the ongoing changes. First thing is we are listed as certificate holder on the COI, which entitles us to be notified of changes, lapses, and cancellations in the policies. Also, as part of our regular screening program, we generally collect COIs 3 times within a 12-month period. Upon the initial enrollment, secondly, during the expiration time, which is generally midterm, and then when we renew the program for the following year, we'll collect a new COI then. We also have other documents that are between us and the vendor that require them to give us notice as well. So between the combination of all those different touch points, we're generally able to keep track of all those changes and lapses.
Great. I think you kind of covered this next question with that answer, but I'll ask you to make sure. So how do you get/find out the daily updates or changes in COI information?
How do we get notified about the COIs as far as if there's a cancellation or whatever else?
Yes.
We're listed at the bottom as a certificate holder, so we are notified of any change or lapses, any what's called material changes in the COI. So as soon as we're notified, we contact the vendor and have them address that particular issue or fix that particular issue. So it's a continuous COI management program where if there's any issues, we contact the vendor on behalf of the client. And again, now we're addressing it within GRMS's world, but you would have to do that if you're doing it internally, which was the original question. You would have to contact the vendor yourself and have them fix that issue. But everyone's questions with COI are valid because of the failure rate is enormous. Like I said, it's in excess of 90% no matter what client we've implemented around the world.
Wow. So are they required by law to notify the certificate holder?
No, they are not. But as Joe said, in our case, we have created additional documentation, which we have some redundancy, not only in terms of that the vendor is supposed to contact us, but also that their broker is.
Okay. It says, if you're listed as additionally insured, are you then a certificate holder? If not, how do you become a certificate holder?
I'm sorry, I'm trying to get Joe to come back into my office because you're asking questions as COIs, and I want to make sure that he's here so he can answer them since he can't get on the audio on his phone. Why don't you ask that question again, Joe? Hold on a second.
Sure.
To answer that question, as additional insured, you're not a certificate holder, but you are entitled to all notifications as additional insured. The way you become a certificate holder is pretty simple. It's just a simple request to the producer that's generating the COI to be listed there.
Great. Thank you, Joe. Okay, I'll give it just a second to see if there's any other questions. Otherwise, we'll go ahead and wrap it up today. Okay, I do want to thank Gerard and Joe for joining us today. It was a great presentation. And everyone, I will be sending out later today a copy of the PDF as well as a link to the recording of this session. And Corporate Facilities also does post copies of the recordings on their website, so you can also go back and look at any archived sessions. And so I thank everyone for joining. Have a great World FM Day. Take care. Bye-bye.